This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, we're going to be going over the datasets, the earnings, and doing a technical analysis over the SPY/the overall markets for the week of May 18th, 2026. And just a reminder, I am streaming Monday, Tuesday, Thursday, and Friday from 9:15 a.m. to about 11 a.m. Sometimes they extend to 12, 1, 2 p.m. Eastern Standard Time. And with that said, let's go ahead and jump straight into the data. Now, we do have an interesting week for the data sets and earnings, but getting started with the data sets for Monday, we really don't have too much going on. We have the tick long-term position, transactions, positions, whatever you want to call it. That's not really going to move the market too much. That's just showing overseas investor positioning. Not too important at the moment. For Tuesday, let's see, we have the ADP weekly change. Nothing really too interesting there. So Monday, Tuesday, the data set's not super important. For Wednesday, we do have the FOMC meeting minutes at 2 p.m. Now, this FOMC meeting minutes is actually going to be pretty interesting because it was Powell's last term as the Fed chair. Now, I don't know if he's going to remain on the Fed board or not. Now that Fed member Moran has stepped down or is, planning to resign. But that FOMC meeting minutes will be a very interesting read because of that. Do I think it'll move the market a whole ton? Not really. Really nothing in the data sets for Monday, Tuesday, Wednesday are going to, affect the market too much. Now for Thursday, we do have some of the important data coming out. We have, of course, the weekly jobless claims. I don't have much to say about that right now. The initial claims have been holding very steady, while the continuing claims have been slowly ticking down, basically since February. So, not really concerning or anything, not really leaning on that one way or another. I still believe we do have an employment issue, but we do need to be seeing some further data now that we have the CPI and PPI pulling up the way that they have. Now, at 9:45 a.m., we do have the PMI, so that's the manufacturing composite services for the S&P. Pretty important data sets. If there's anything that's really going to move the market on Thursday, it will be those PMI numbers. Now, they are expecting a slight decrease. I actually disagree with that. I believe based on the CPI and PPI, we should actually be expecting a slight increase in these numbers. So we might be seeing the PMI coming in slightly hotter this time around. 10-year tips auction, don't care about that too much. The Atlanta Fed GDP now has ticked back upward. Oh, this is a Q2 print. Okay, so this is actually a big print. Um, that can definitely move the market quite a bit. But really, for Thursday, it's mainly that 9:45 a.m. Time slot. The Atlanta Fed GDP does come out at 10, so again, it's really all that same time slot. Now for Friday, we do have some Michigan inflation expectations coming out. US leading index, and this is all at 10 a.m. Also, consumer sentiment, consumer expectations. Now, the forecast is basically saying that these are all going to come basically right in line of what the last prints were. I disagree with that. I think that based on the CPI and PPI, we did see a slight increase in the short-term inflation, and extremely likely the Michigan inflation expectations will pick up on that. Now, for the consumer expectations and consumer sentiment, these are still below that 50 mark, which means that it's still in a negative stance. I expect these to actually go downward now that we're seeing the inflation moving upward. One of the first things I've been hearing out of a ton of different people is that, oh, we're going to have to slow down our spending. Um, that should most certainly be hitting the consumer expectations and sentiment for May. So, other than that, not a super big data week. Um, Mainly it's going to be Thursday and Friday. But we do have those FOMC meeting minutes on Wednesday that are going to be important. Now, for the data sets or for the earnings this week, let me get this shifted. 1 second. There we go. All right. And for the earnings this week, let's see if it will show the icons. Oh, come on. Okay, so it's not going to show the icons. Cool. Anyway, so for the important companies, let's see. Target, Wednesday morning. We do have NVIDIA on Wednesday afternoon. That's obviously going to be super, super, super important. NVIDIA is still the market leader right now, even if Google did surpass its market cap very, very briefly. But NVIDIA is still the big one right now. Um, Based on their guidance, everything else will either have a rallying market or a market that is dumping. And that's very, very true to NVIDIA's. Usually NVIDIA is the one causing, the market rally or the market dump. Not all the time, um, but a lot of the times NVIDIA definitely plays a major part in that. Now for Thursday morning, we do have Walmart, kind of same as Target. It's nice to read those because we get to hear from you know the primary consumers of our country. Um, Obviously that's very important, and it's important to hear their guidance on if they're expecting customers to pick up volume or continue to decrease volume. Now let's see, we have Webull. Nothing too interesting besides that. There's Elf. So mainly I'm looking at pretty much just NVIDIA this week, which again, that will be on the after hours of Wednesday, the 20th. So that kind of goes in line with what we've been expecting for the rest of the week, where Thursday and Friday have the important data sets. So NVIDIA will kind of kick that off, and then we'll get the data sets on Thursday and Friday to bring volatility or negative volatility. Now, for the CME FedWatch, again, I try to bring this up. So going over the Fed CME, um, we check the December reading. And the reason why I do that is because really that's kind of what's reflecting the market right now. Um, Very, very likely we're going to be seeing pauses all the way until December. We might get something starting to shift come September, October, but we'll know more by just looking at what's going on for December. Now, for December, the rates have shifted massively in the favor of a rate cut or a rate hike, excuse me. So the odds of a rate cut have went from above basically almost 40% a month ago down to less than 1%. Okay. Massive, massive, massive shift. Okay. That is an absurd shift in the expectation. Not only has that expectation went up, the odds of the rate hike went up from around 9%. As you can see, within that same time frame, it was below 1% at one point. Um, Now that's far higher. Um, Currently, just a single 25 basis point hike is about 40% odds. A point 0.50 basis point hike or two 25 basis point hikes will be, 12% chance. So overall, we're sitting at a little over a 53% chance of at least 1 to 2 hikes this year. That is enormous, seeing how we were looking at this year, at the beginning of this year, we were looking towards the end of the year at a possible 1 to 2 hike or 1 to 2 cuts. Um, so the market is severely reacting to the CPI, PPI data, and also severely reacting to Fed members Moran wanting to put in his resignation. He was basically one of the only Fed doves out there. Dovish means that you're in the stance of wanting rate cuts, bringing the yields downward, the inflation or the Fed rate downward, excuse me. Whereas now the Fed is pretty much full of hawks, which means that they like to raise the rates. They like to quote unquote get the job done. Um, and very much the market is pricing that in currently. So we'll still go over this, obviously for the rest of the year, but the expectations over the last, basically 2, 3 weeks now have done a full 180. We were entering into a market that was wanting cooling. Now we're in a market that's saying things are very hot again. So that's something to keep in mind as we move forward.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the SPY technical analysis tonight, we are going to make this fairly quick as my expectations for the week are, you know, not going to be so great, unfortunately. Um, so let's get into that. Now, first I kind of want to look at the weekly time frame. And there was something that we discussed last week very, very specifically, and that was that last week was the weekly upper Bollinger Week 2, which meant that we were expecting a higher high from the week 1, which we did get, and from that week 2 higher high, we expect a downward consolidation. Okay. From the weekly time frame, this is telling us that potentially we could be heading down all the way. Currently, it's at the 687.58. That 20 mile will be pulling up though pretty aggressively. So let's just mark that basically around the 700 range. Okay, so the market's telling us very clearly that this mechanic played out very, very accurately. And now we're ready to start pulling back. We're also seeing this on the daily time frame. And what I mean by that is that we've been seeing a little bit of a different mechanic. Now, again, it sounds silly, but I always kind of call this mechanic no man's land, where the market price is above the daily 5 mile, but it refuses to push into that upper Bollinger. When that occurs, and we're going to go back to a few times this happened, when that occurs, usually the market sells off pretty hard. Once the selling starts kicking in. We saw this before the Iran war. We saw this in late 2025. We saw this in early 2025 where we were extremely bullish up in here because it looked like a cup, a handle, and from that handle, a crash. So, um, but during that time we had multiple upper Bollinger rejections. And so it creates this range where basically it's showing that the bulls are tapering out. The bulls are not willing to push the level too much higher, but they're willing to push in that range, okay? Because obviously the market did go up quite a bit. So it's hard to say that's bearish when, obviously the market went up 25, $30. Um, but the bearish condition is that if you don't claim that upper Bollinger and you start rejecting that 5 mile, what comes after that? Well, again, it's the 20 mile. We haven't tested the 20 mile in believe 29 something sessions now. I have to count that, but I don't have the patience for it right this second. Um, but basically like 20, 30 sessions now since we've seen the last 20 mile retest. Based on the name of the 20 mile, that means that every 20 iterations of whatever time frame you're using, you should be expecting that test to come through. Does it always come through exactly on the 20th day? No. But it will be staying around that time frame, because it does have that average to, contend with. So when our upside is saying, okay, we're basically cutting out the upside, we're no longer going to be buying this level. We're now selling below our weekly level, which is the 5 mile. What's next? Can we retest this 10 mile and bounce upward? We can, but usually that's not something I look for. Usually, again, the 10 mile is more of a short-term indicator, trend indicator, rather than a level two bounce. Have a clean bounce off of. Um, so with that said, the 10 mile is currently at the 735.19. The overnight price action's at 734.44. So even as of right now, we're testing that level, and very likely we will be heading down towards that 20 mile. Now, currently the 20 mile is at the 723.80. I expect this to be around 725, 726 over the next 1 to 2 sessions, which means that the upper bounds of this level will be around 730, which truly means we're not that far away from it. Um, the upper bounds could be around that 728, 730 range, depending on how high the 20-mile pulls, and the lower bounds can be basically all the way to the 721. Okay. Um, that puts that right within striking distance for this week. The overnight price again is at 734. For us to have a a full 20. I can't talk tonight. A full 20 mod downside test. Okay, we don't basically only need to shed about $10 off the top of the SPY. Well, just exiting this upper Bollinger and rejecting this 5 mod, we've already shed, almost $15. So can we definitely sell to that 20 mod this week? Absolutely. I think it's most certainly coming. Now, with that said, we can go ahead and turn off the Bollingers and start looking at some of the fun levels here. This is the hourly time frame, and I'm just going off of previous gaps that I'm looking for, where I see a lot of liquidity built before a major move upward. Usually those are the type of gaps that you can go level to level. We actually have an additional one right here, which I will just briefly mark, but I don't expect dealers to really focus on that one too much. Um, with that said, we basically have three major levels to contend with. We have this daily 20 mile, which currently it's at that 723.80. I expect this to pull upward. So again, I expect this to pull upward towards that 725. Okay, 725, 726 range, which is exactly at this major liquidity gap. Um, so I'm looking at that very closely. Okay, that's at the 725.16, basically a whole $10 from where we are currently. Um, I want to bring up the drawing tool because we have a lot of bearish structure going. We have a left shoulder built right there. We have the head right here, which should be in purple. And then what do we need to build out? Right shoulder. Will we even get that right shoulder? Maybe not. Um, Seeing how aggressive the selling's been already, we may not even get this right shoulder. This right shoulder would be saying that we need to retest the 5 mile to the upside, which we may not be doing. Now, we do have this inverse cup build, which is also a head and shoulders. Okay. It's not fully built yet, so that's how we know that this next selling level I have marked out is very, very, very likely to get hit. I would be beyond surprised to see that level not taken out. So that's what we're looking for. We're looking for that next selling level, which very likely is coming tomorrow. Unless we get some. I mean, there's really no data to be given, so unless there's a news event or something, um, I fully expect that 731.83 to be taken out. Okay, from that level, okay, very likely build a little bit of liquidity, and then we could start heading down to that 20 mile. However, we do have to be a little concerned because with how aggressive this selling is, um, we absolutely can head to the 20 mile within a single session. Um, on the daily time frame, we see that the upper and lower Bollinger are pretty expanded. However, the lower Bollinger is only at that 696, basically going to be at that 700 range, which, if you remember me discussing the 20 mile, um, those levels are going to coincide very, very closely. Could we see the market pull all the way from essentially this upper Bollinger all the way to the lower Bollinger within a week, week and a half, absolutely. We've seen that move happen within a single day before. Um, so don't count that out, especially when we're seeing, and I want to go to a different symbol for a moment. We're going to go to the HIG because the HIG, once you see selling on the daily time frame, that really is a major signal. Okay, that's telling you that big money is selling the top. HIG is again the high yield corporate bond ETF, and we'll take a quick look at liquid as well, which is the investment grade corporate bond ETF. Um, but essentially, when you see these funds start to sell, these are basically the top echelons of equity risk. When you see selling here, that becomes a major concern. This is the weekly time frame. What happens almost every single time you start seeing these red candles? Usually some form of selling, some form of selling, some form of selling. Well, candle's back again, and it's not looking like this type of, this week is going to improve that. So, do we have some major downside coming? I definitely do believe so. And within the HIG here as well, we do have a lower Bollinger Day 1. So from the lower Bollinger Day 1, we do expect a Day 2 lower Bollinger move, and then a slight upward consolidation. Basically, this exact movement that you see right in here. Hold on, let me just delete all the drawings on this really quick. So you see this exact movement here. You see lower Bollinger, same one. I want to do rectangles. They're going to be easier. Day 1, claim the lower Bollinger. Day 2, receive the lower low, and then consolidate upward. And we're just going to do this for each of these moves. Happens again, happens again, happens again, and starts to happen again. Didn't mean the line. Starts to happen again, but that's when that rejection happens and we start pushing up to the upside. Okay, so this is a very just constant signal to look for within the HIG. So what should we be expecting? The exact same thing. We should be expecting a lower low into some form of consolidation to the upside. That upside consolidation could be all the way to the 20 MA, but we've been testing that level for quite a bit. So that upside consolidation might only be to the 5 MA. Okay. Well, the 5 MA on HIG is only like 30 cents above price. That will be pulling down quite aggressively as well. So that 5 MA upside consolidation isn't going to give us much reprieve. It should basically push us to the upside, consolidate, then back downward again. Sort of like this movement in here. I'm expecting a lot of this until basically the overall SPY, QQQ, semiconductors hit those 20 mile levels. Now, we also see this selling out of liquid, which let me go ahead and delete all this stuff. But we're starting to see this selling out of liquid as well. And again, once the selling on HIG and liquid start, usually that means some pretty bad news. Not always, but usually it does. Um, so there's a lot of signals telling us that we're about to have a pretty large sell-off. Now, last thing I want to look at here really is Nvidia. Now, Nvidia had this massive head and shoulders, and this is the daily time frame here. But Nvidia had this massive head and shoulders, and obviously that broke out. Um, but from that, we are now starting to see this head and shoulders again. The overnight price is at 222, so still quite high. Um, However, if we're starting to get a major sell-off within semiconductors and everything, which it's looking like it's really starting to want to take off here, um, then I would expect that head and shoulders. And from that head and shoulders, where does that take us? That takes us back to this really massive liquidity range, between the 168 to the 196. So could we be seeing a top coming in for NVIDIA here in the current cycle? Absolutely. Because what does that create? if we do head back into that essentially, liquidity spot, that creates a very, very large head and shoulders. Okay. On the weekly time frame, that head and shoulders would be taking us down quite a bit. So, am I expecting some crazy sell-off right now? Not really, but we're definitely due for a support retest. Throughout semiconductors, and I will just go ahead and delete all the drawings. We don't need them right now. But throughout semiconductors, kind of like the SPY, we have not tested the 20 mil in an extremely long time. Well, the 20 mil on the daily time frames at the 476. Semiconductors are currently at 504. So they've lost a whole roughly $29 off the top so far, and they still have, literally about $25, $30 to drop still. Um, can we see that happen within 1 to 2 sessions? Absolutely. Um, Especially with how hard semiconductors have been selling off. Uh, Friday was a -4% day. Um, we have one or two more of those type of days, we'd be at that 20 mile range. Once we get to the 20 mile, um, things will change a little bit. We won't be as bearish, but we will start watching, the VVIX a lot more. Um, VVIX did pull down very aggressively, but it's still in that very cautionary range. And again, that cautionary range is between the 90 to 98. But from that range, if we start heading back upward again, then we're going to be in that, very, very dangerous red selling range. Now, is it possible that we're going to see that type of price action happen again? Um, Absolutely. We're seeing UV or UVIX and UVIXE having a little bit of a good time in the overnight so far. And with the SPY and everything else selling off, I think it's very clear that we're going to be heading to the 20 mile before any further upside or downside. But again, at that 20 mile range, it is between basically where the market is expected to trade. So we will take positions on both sides once we do hit that level. Um, Many of us are currently very, very put loaded. We entered those puts, which I'm super proud of. We entered those puts basically around the 749, like 27 range, give or take. So almost exactly at the top, if this is the current top. So I'm very happy about that. But those, no man's land do create very, very bearish conditions if you don't see the push occur. And I saw that level. I knew that that would be the upper Bollinger and that we have been rejecting it. So if there was going to be a rejection, that was the place to take those puts. If not, then we were just going to secure that level, see a higher high, and then we would have, added on to those puts we already added. So, I was okay with taking puts basically the second we pushed into the upper Bollinger, and that's the only reason why we really secured the puts that we did. But we are writing these puts. And again, they're all dated out to early June. So we have plenty of time in them, but we are taking a large majority of the profit on those puts at the daily 20 mil. From the daily 20 mil, we will hedge the upper Bollinger and the lower Bollinger and wait for the next move, and once that occurs, we'll be watching the HIG, watching Liquid, watching VVIX, and seeing what dealers are wanting to do. But the next move that is, extremely, extremely, extremely obvious should be that daily 20 mil. Now, one last thing I want to talk about is precious metals. I know there's a lot of selling going on in precious metals. However, I still see the upside quite a bit. So I still have silver calls. Let me actually check the date on them because I believe they're dated out quite a bit. Hold on, pull out my portfolio really quick. So I have the 100 silver calls for September 30th. Okay. Now, when yields pull up, when treasuries pull up, usually that's not good for precious metals. Um, I'm still in the camp that this oil shock, that this inflation shock isn't going to last for an extremely long time because truthfully, it's in the best interest of the entire globe to get those oil prices down very quickly, whether it's manufactured or not, and to pull this inflation back down. Um, so I'm still going to be buying some of these silver calls. I'll still be adding to that position, but I do want to wait for silver to pull down to the daily 20 or the daily lower Bollinger, and that's when I will add more of those calls. But for the current time, I expect those calls to be red. Um, and not too much I could do about that. But overall, I am still very, very bullish on precious metals. Now, last thing we're going to talk about here is Bitcoin because I said, and I want to turn off the drawings, because I said on the weekly time frame that this 20 mile range is extremely likely to be hit. And where's the 20 mile? It's at that 75,400. Well, Bitcoin has been pulling down. It was at 80,000 yesterday sometime. It's currently at 77,100, starting to create a little bit of a weekly head and shoulders. So very likely we'll pull down to that level. And from that level, that would be towards the lower Bollinger on the daily time frame. So Bitcoin's telling us as well that we do have some downside within overall equities, even though again I don't use Bitcoin as a one-to-one way to read the market. It's still important to use Bitcoin as an indicator when it's extremely institutionally owned right now. Um, but yeah, I think I covered everything. We'll have to see what Nvidia gives us for their earnings this week. But other than that, let's have a very great week, everyone. I will be live tomorrow at 9:15 a.m. and I hope to see you all there. We've been absolutely doing very, very, very well over the last, I think it's what, 3 or 4 weeks now that I've been full-time streaming. Um, Even on the days that haven't been so good, we have been able to pull neutral and then make profits afterward without any crazy revenge trading or anything else. So again, I highly, highly suggest people try to come to those morning streams. They're free. It's a great learning opportunity, and people have been, you know, changing the outlook of their trading entirely just over the last couple weeks. So, um, highly encourage everybody to join those streams. They're free, and all it takes is your time. you know, worst case scenario, you're gonna lose an hour or two of your time. Um, Best case scenario, it might be one of the best things that's ever happened to you. So, um, yeah. Other than that, have a great week, everybody. I look forward to seeing you all tomorrow morning. Take care.